Welcome to Conversations. I'm Muqtadar Khan, your host, and today I'm going to talk to you about the speed with which the Indian rupee has been crashing in 2025. If you look at the reports, this is from the Economic Times. The rupee hits a new record low, slips past 91. Apparently, the highest it reached was 91.14, and then yesterday, actually, it went up to 90.91.6. This is incredible. I was in India a few months ago, and at that time the exchange rate was around 83, 84 to the dollar, and now it has become 91.6. And at the rate at which it has been crashing in the past few days, it appears it's quite possible that we might see a dollar that is worth 100 rupees. So, in today's discussion, there are three or four things I want to do. I want to try and explain why this is happening, even though India's economy is doing very well. If you remember the previous quarter, India has grown by 8.2%. India's exports have also increased. India's imports have decreased, which means that the net trade figure has diminished, the deficit has diminished, which has a negative impact on GDP. So there seems to be a lot of positives in the Indian economy, yet the rupee is falling. And why is it so? So that's the first thing I will do. The second thing that I plan to do is that I will talk about the impact of why this is happening, and I will also talk a little bit about the historical nature of it, and ultimately how does it impact the Indian economy. I will talk about that. I don't have any policy recommendations because, unfortunately, in order to make good policy recommendations, you need a lot of data. And in order to have that data, unfortunately, the Indian government does not share data as easily as, say, the US government. So, first, let me show you what is the state of, sorry, this is the wrong slide. What is the state of the Indian rupee? At the moment, this is before I started recording it. There has been a slight improvement. It has gone down from 91.16 to 90.95. So it is still above 90. And so that is the status. This was just I think it is about an hour ago that I checked on what it was. You can always go and look at it in real time. But what you can see here is that if you go back to 2014, I'll show you the historical data, but in around January of this year, it was about 83, 84 to the dollar, and now in the past 11 months, it has dropped significantly to 91. So roughly 10% to 12% drop. I want to point out one thing. A lot of people are just focusing on the dollar. The Indian rupee is not weakening just in contrast to the dollar. It is also declining with regards to all other major currencies. So if you look at this particular slide that I'm showing, in January, the exchange rate for rupee with the Great Britain's pound, the English pound, was 107.5. It is 118 now. So I think the decline with respect to the pound is slightly higher than the decline with respect to the dollar. And this is in spite of the bilateral trade agreement that India and Great Britain have signed. And then if you look with regards to euro, the euro was trading in January at 1991 at the rate at which the dollar is rating right now. And then it has dropped to 105 to 107 in December. Oh my God, that's 15 to 19% decline. That is a big decline with regards to Europe. If you look at the Japanese yen also, there is a slight decline, 5 to 7%. And with the Chinese yuan, RMB, it is 4 to 5. So the decline with regards to China is the least, but still, even with regards to China, the rupee has been declining. So the point is that there is a decline across the board. And that is worrisome as to why that is happening. So there are a few reasons why that is happening, and let me share what those reasons are with you. I think number one, the biggest reason why that is happening is the uncertainty that Donald Trump's tariffs have created on Indian exports. So what has happened is that even though the Indian exports have not declined as one expected them to because of the tariffs, because partly because of diversification, that India is sending the same stuff to other countries, working hard on that. And the second thing is because India, there was a lot of front loading. So people who were importing stuff from India in the US have imported a lot of stuff way ahead and are, so there's a stockpile of pre-tariff exports here in the US. So the exports have been clogged in. And the third thing is that India has two major exports to the US. One is the electronics and iPhones, for example, and the other is pharmaceutical products, especially generic pharmaceuticals. Both of them have so far been exempted from exports. So right away there you can see about 25 to 30 billion dollars of the overall 80 billion dollars worth of exports that India has towards the US are exempted from tariffs. So because of that, also the impact of tariff hasn't been as much as one would have thought on India's exports. But yet, there is a perception of uncertainty. And then with the talk about the rice related potential tariffs and the fact that the negotiations with India seem to be dragging on, and the fact that there have been lots of negative stuff coming from Donald Trump towards India, people are very nervous about India-US relations, and as a result of that, the market sentiment has been a bit low, and perhaps that's one reason why foreign profits have been withdrawing. But if you look at it, for example, let me see if I can pull it up for you. Sorry, that's not the slide. Let me see where it is. So this is the net foreign portfolio outflows from India. So the reason why this money has been flowing is it's been flowing out since September. So it has nothing to do with tariff. This was even before Donald Trump was elected. So from September 2024 till now, $28 billion of US money has been, of US not just US, worldwide investors in India who are private investors have withdrawn their portfolio investments. And some people were saying that, oh, this is because they're taking profits. No, but the slogan on the market, in the global marketplace, has been sell India, buy China. So some of these people have been buying Chinese stock and basically vacating Indian stock. So that is $28 billion. And in 2025 alone, it has been $18.4 billion. So you can say that from the last quarter of 2024, $10 billion were withdrawn from the Indian market and invested abroad. So the question is, what is it that is making foreign money nervous? Why are investors from overseas not feeling confident? India is the fastest growing major economy. So if you are a big time investor and you're getting 8.2% economy, so if you are just following an index fund, you're just investing in an index fund, mutual fund in India, you should be getting better returns than anything that the US or any other market has to offer. So the riskier ones are going to China, and those who are really seeking safe harbor have actually returned to the United States. That's one reason why clearly this has dampened the enthusiasm of voters. And the question is fair enough. Like, for example, if you would ask me to invest in India, I'm not a rich man, but if you were asked me to invest some of my savings in the Indian market, I would first explain to me, why are these people running away? Why do you want me to come in and invest money when everybody else who has been investing in India, who made the decision to invest in India, is withdrawing their funds? So the foreign portfolio investors is running away, and that is a sign of concern. The second, as I said, is a sentiment that has been impacted. The third is that apparently a lot of people from India, Indians themselves, are not investing in India and investing abroad. That is also a worrisome thing as to why people who are in the private sector in India don't feel enthusiastic about the private sector in India. Now, let me show you a little bit about the foreign direct investment. So the while the portfolio investor has retreated, India is continuing to attract foreign direct investments. About $50 billion came in the last 11 months to India. So that is okay. I mean, it's in keeping with previous years. But there's something fraudulent about it. And let me show you what it is. So these are the five biggest sources of foreign direct investments in India: Singapore, Mauritius, the United States, United Arab Emirates, and Netherlands. In the US, the US has Indians has the biggest diaspora of the United States of India is in the United States, about 5.5 lakhs. So about 55 lakhs, 5.5 million, of which about 700 million, 1,000 or 7 lakhs are illegal Guspitias, migrants to the US. But so the remittances are very high, and so I think that the US investors are genuine investors. The big companies, for example, Microsoft just invested $17 billion in India. There are investments in India's data centers, etc. So this is genuine investors. But the rest of the four, Singapore, Mauritius, UAE, and Netherlands, are, I think, fraudulent. By fraudulent, what I mean is it's called round tripping, which means that you are an Indian investor, you have a lot of money, you are Ambani or you're Adani or one of those rich billionaires in India. So instead of just investing in India, what you do is you take your money out of India. And that's where you start buying dollars. That also increases the demand for dollars. And that's why the dollar's price has gone up. Just as when foreign portfolio investors withdraw their money from India, they're selling on the stock exchange, they're getting rupees, and then they're buying dollars to take it out. So when they buy dollars, the price of dollar goes up. And that's why rupee is going down, because there's more demand for dollar than there is for rupee. So what people are doing in India is they're creating these shell companies in Mauritius, Singapore, and other places. Mauritius is a tiny island with a GDP per cap. Total GDP is $15 billion. It's nothing. It's like less than the county I live in here in the US. There are many cities in India which are much more richer than Mauritius, but it invests billions of dollars in India. Where is that money coming from? It's just being rerouted from India. So all of these big time investors, Singapore, Mauritius, and Netherlands, are clear round tripping, and UAE is mixed. There are some UAE investments which are direct, such as in Gift City in Gujarat, and others which are coming from the UAE's sovereign wealth fund. But part of it are again Indians settled there who moved there and are bringing money back into invest. So basically, they are not paying taxes in India. They're getting tax benefits for pretending to be a foreign investor. So that is why the foreign direct investments in India are not as impacted as portfolio investors. So that is the second thing. But the third issue that a lot of people have been making this comment. I was listening to Indian commentators saying one reason why the dollar is going up and the rupee is going down is because the dollar is becoming strong. And so the rupee is staying where it is. It's the dollar that is going strong. So there's nothing wrong with the Indian economy. It's just that the dollar, for whatever reason, is becoming strong. I find that untrue, because let me show you today. I checked today the dollar index. The dollar is 98. So the dollar is worth 98 to a dollar. It means it has gone down by 2%. So the dollar has declined. So if you look at the dollar index, the dollar has also been becoming weaker and weaker. When Donald Trump became president, I think the dollar index showed 1.08. So the dollar was stronger when he became president, and the dollar has become weaker since he became president. So the dollar is declining and the rupee is declining more. So those analysts on Indian television and shows who are saying that one reason why the rupee is going down because the dollar is going down, is going up, are wrong. Don't pay attention to those analysts. All you can do is just go to the dollar index and you can check, and you can see that the dollar is also declining. And so what I'm trying to say is that you're going to see uh, problems because the rupee has become much weaker. So what is going to be the impact of this going forward? the impact is going to be in some ways beneficial and some ways harmful. The beneficial part is when uh, India's exports will become cheaper. So the tariffs impact that Donald Trump has mm, raised, saying that, oh, the price for the consumer will go up because of the tariffs, and so they are less likely to buy Indian goods. That is going to be partly mitigated by the weakening of the rupee, and therefore Indian exports will be cheaper. And so the tariffs impact for the consumer will be less in that sense. So that's one advantage, and the fact that the rupee is now weaker means exports of India to everybody else in the world will be cheaper. So the fact that India's rupee is declined vis-a-vis every currency which is important. So Indian goods in Great Britain, in Europe, in China, in Japan will be cheaper. So India should be able to, or potentially should be able to export more to these countries because the rupee has become weaker. However, India is a net importer, which means that India's total imports are more than its total exports. So last year, India's total trade deficit was about 200 plus $billion, which means India is importing more and exporting less. So as a net importer, that's a problem for India because it imports oil, it imports energy. All of those things are going to become expensive. India is at the moment quite lucky because the price of oil has gone down considerably. It's in the $60 a barrel range. So right now, that's not going to hurt India much. But if the price of oil goes up to say 80 or 90, then the extra cost of buying more expensive dollars to import. So imports are going to become more expensive for India. Now, some of the imports are quite essential. For example, India buys a lot of electronic uh, uh, items without which India can't make. So, for example, India exports the iPhone, but most of it is still made in China. It is just brought and assembled in India. So, a lot of India's electronics is very similar. Much of it is imported from China. The same about pharmaceuticals. Most of the chemicals are coming from China. So, India is going to, all these items which India is importing from China, which are ingredients into India's exports, will become expensive because the dollar has become more expensive. Uh, and so India's exports there could become more expensive because the components in India. So those goods whose Indian component is high will remain cheap, but those goods whose ingredients or its components are mostly imported, they will remain more expensive, and they will not be they will not benefit from the the weak rupee. So we will see. I mean, this is too complicated a math for me to do. I don't know about all the goods and the prices at which they are coming at. I'm hoping that by the next quarter we will get some idea about it when you look at current account and deficit, and if you look at the total imports exports data. But that is one impact. The second impact is ultimately, if there are lots of goods that are being imported, and if the value of rupee follows, then it is going to have an inflationary effect, which means things are going to become more expensive. And that is no doubt about it. So if people are not going to get, like, the rupee has gone down by 10%. So it went from 83 to 91, roughly ₹8. You're paying 8 rupees more, which is 10% more. So there's a 10% inflation in that sense on all imported goods. Whatever you want to buy, which is imported, is going to be more expensive. And as I said, most of India's pharmaceuticals, as well as India's electronics, etc. So if you're buying a television, if you're buying some medicines, those prices should be up right now in India. And so it's going to cause inflation, and that is going to be troublesome too. So it's going to be interesting to see what kind of an impact in the long run a weakened rupee will have on the Indian economy. And one final point that I want to make is, if the rupee continues to weaken vis-a-vis dollar, then the total India's GDP, total GDP, which was projected in April of 2025, that at the end of the year 2025, India's GDP will be about $4.2 trillion. But if the value of rupee declines then that figure could go below 4. And so India might end up being a $3.9 trillion economy by the end of the year, and definitely not bigger than Japan's. And so India will not be the fifth biggest economy. One could argue that India was never a fifth biggest economy because we were not taking into account the declining rupee. So at the end of the year, we will know. So another thing that is at stake for India is who is the fourth biggest economy, India or Japan? Japan's yen has also declined with regards to dollar a bit, but the rate at which the yen is declining is less than the rate at which the rupee has declined. But you never know. The RBI can go back and do so. So basically, RBI has not done enough to keep the dollar at 83. So what apparently the RBI is doing, the Reserve Bank of India, is it is selling enough dollars in the market to prevent volatility, like suddenly jumping from 83 to, imagine if it had happened overnight from 83 to 91. This has taken 11 months. But if, say, tomorrow you get up and you see dollar is 102 instead of 91, and that will shake up the market. It'll have a huge negative impact on everything. So India might reach 102. The dollar might reach 102 rupees, but it might happen gradually. So the impact is not that shocking on the market. So what the RBI has been doing is that it has been essentially preventing volatility without defending the rupee at any particular price. So that is what the Reserve Bank of India is doing. But if the Reserve Bank of India wants, it can simply sell more dollars, reduce the demand for dollars, and bring the price of dollars down. However, it will mean that it will be running out of dollar reserves that it has. And it will have an impact on its current account, which means borrowing money from overseas becomes more expensive, and paying the debt, foreign debt. India's debt to GDP ratio has been increasing. India's debt has now gone over $3.8 trillion. Luckily for India, a lot of that debt is domestic, but there's still a huge component of international debt. And so now the cost of paying the interest on those debts will also go up because of the decline of rupee. So anyway, so it's going to be a mixed impact. I cannot fully say that this is because India's economy is doing well. It has been growing at 8.2%, but the IMF has actually questioned India's data, so that is also going to have a negative impact on the sentiment. That's probably one reason why the foreign money is running away. But we will see what happens in the next few months. And as you know, I keep an eye on these things. I will talk about it. I just did a report on the world inequality report that came out from Paris. Take a look at that. And I'm inviting two very prominent economists to the show in the next 24 hours, and we will talk about inequality, income inequality, and wealth inequality in India, and what will that do to the goal of becoming Viksit Bharat by 2047. So anyway, thank you for watching Conversations. If you have not subscribed to the channel, do subscribe to the channel, like this video, and press the bell icon. And if there are some interesting questions, I'll be happy to answer them. People are talking about other events here. So anyway, thank you for watching Conversations. I'm your host, Muqtada Khan. Take care.